In the metals quadrant, taking a look at the June gold futures contract on the bull again. Gold rallied 3 of the last 4 sessions, moving a total of 3.25% higher in those 4 sessions. But what might be even more interesting is gold is now only 1.2% from its all-time intraday high after having dropped 6.68 from that all-time intraday high. And today we closed at a new all-time high closing price. On the high today, 24.2390, that was up 1.61%. The low, 23.7780, that was down about 1/3%. And as I mentioned, we finished near those highs, up about 1.5%, and that was a new all-time closing high. On a weekly basis, gold finished its 2nd consecutive week higher. Now, looking ahead to the future FOMC meetings, we've got one in July, and the probability of no rate cut there is already at about 90%. But the rate cut probability in September has increased to 50%, which is positive for risk assets as long as the Fed stays away from tightening. They're obviously in easing mode, as I just mentioned by those probabilities, and it's a positive for assets in general, and gold is an asset. And we're seeing gold respond to this. Many people believe that this particular course of action is going to start a new inflation cycle or a reflation cycle from where we're currently at. That may be the case. Gold may be rallying on that as well, but gold rallies with other risk assets as long as it does not have a headwind from Fed tightening. Right now, it doesn't have that. We also had some dollar weakness. The dollar dropped on weakness as the yields dropped, and that's a tailwind for gold as we see inflation really stabilizing and not necessarily aggressively moving back toward 2%. So the yield weakness that we had this week, single digits across the board, biggest move was in the 30-year, down 8 basis points, was also a tailwind for gold.